Good evening, everyone, and a warm welcome today for a webinar hosted by Advisor Alpha and powered by Renaissance Investment Advisors. Thank you for taking out the time to join us uh, today. Markets over the past few months have been reminding us one important thing: volatility is inevitable, but many investors often on miss is that volatility is not always a threat. In fact, we understand and manage correctly, it can be a powerful opportunity. That's what exactly today's session is. Volatility equals to opportunity. How investment can win in certain times. So over the next hour, we are going to help you cut through the noise, understand what really drives the market swings, what is important, learn how investing investors should stay calm, disciplined, strategize, and during this certain phase. I now bring our today's guest, Mr. Chirag Barot. Chirag has been nearly in this industry for last 2 decades, and he's a postgraduate in diploma holding in finance, and has been working with some of the most prestigious institutions like Kotak, Axis, and Angel One. Currently, Chirag is with us today as a associate vice president. Over the years, he's worked very closely with investors across all market cycles, helping them navigate through volatility, avoid common behavioral mistakes, and stay aligned with long-term goals. What truly sets him apart is his complex market concepts and translating them into practical insights that investors can use during this time. So the volatility is pretty high, I feel, today also. What do you think, Chirag?
It is it's there. I mean, we've been experiencing this more so over the past 15, 20 days. And I believe that yes, volatility, though it is a little unsettling, it is also an opportunity.
Okay, so let's start. Over to you, Chirag. It's the floor is yours,
Thank
and
you.
yeah.
So, good evening, friends. Chirag, Barot, as Ronak, my colleague, officially introduced. Today, we are going to be talking about volatility, whether it is an opportunity, whether it is, a threat. It can be unsettling, yes, but what we would like to believe is it's an opportunity, and how the investors can benefit from this opportunity. So that is the whole topic of today's discussion. We'll try to keep it brief, probably 30 odd minutes, and then another 15, 20 minutes for the question answers, right? So let me just begin with something. I just have an interesting graph, and I'm sure you all would love to see that. uh, I just want to present a big picture when we look at India's data and India's growth basically. So I have this data from January 1960 till round about January 2025. So it's a 65-year period. And in this 65 years, what has happened is India has grown from being a $37 billion economy to three and a half or 3.7 trillion, right? It took us 65 years to go from 37 billion to 3.5 trillion. That is not the interesting. The interesting part is what we believe we can grow as much as what we have grown in the past 65 years. So from 3.5 or 4 trillion, we can be 8.5 trillion. That is our very firm belief. But all of this will happen in the next 5, 7 years, right? So what took us 65 years, we are going to be achieving that round about in the next 5, 7 years till round about 2033. So massive, massive opportunity, right? Double the growth. How many of you would be interested in it, right? I mean, this is again cutting through the noise, right? We did not, or we do not look at the past data, but yes, the data, the numbers are in front of us. The opportunity is huge. Again, the second part is Nifty. Now, if I say Nifty currently today at around about 25,000, it could be 50,000. How many of you would agree with me, right? Looking at the current volatility, looking at how it has corrected from 26,200 odd in September of 2024 till round about 23,000, and then again it has moved up to around about 26,300, and again at 25,000. So it's been very volatile. But when we look at the larger picture, we expect Nifty to be around about 50,000. Isn't that interesting? Right? Nifty at 50,000. So double from here. And it has got we've got hard numbers for it. So when we look at Nifty, and in around about 2020, we've almost doubled from there to from 12,000 odd to 25,000. And from here, at let's say the Nifty's historical growth has been around about 14, 15%. So even if we do that number, we could reach 50,000 by 2031. So from 2020 till 2025, Nifty doubled. And from 2025 till 2031, we are expecting the Nifty to double to 50,000 again, right? So every 5 years, the market would double. At least that is what has happened, and that is what we are expecting for the next 5 years, right? Why equities? Right now, when I say investment assets, or the asset allocation, so Equities is obviously one aspect that we are talking about. There's debt, right? There's gold, obviously, there's gold, there's real estate, debt, and equities. So when we talk specifically about equities, and I have drawn a comparison of equities and debt. So starting year zero, if I have to take a 10-year view, starting year zero, if your debt grows at round about 6.5% CAGR, we will reach, your money would roughly double. So let's say 1 lakh rupees would double to around about 2 lakh rupees in 10 years time. The same thing. And historically, I'm not even getting into what can happen, but what has happened historically, if we grow at the same pace, your money could be 4x. So 1 lakh rupees invested could become 2 lakh rupees invested into debt at 6.5%, and the same 1 lakh rupees could be 4x. So 1 lakh rupees could be 4 lakh rupees invested into equities. That is the potential for equities, right? Yes, there will be times when the market would correct, there will be times when the market will be volatile, there will be times when the market will be turbulent, right? But if we stay invested for a longer period, there are definitely benefits, there are definitely rewards to be reaped, right? And at, as I said, at 15% we could be around about 4x. So again, a massive opportunity for investors who are starting fresh, who have invested earlier, but again, not made suboptimal returns. These are the kind of opportunities that equity markets provide. Favorite topic, global geopolitical risk, multiple stress points at once, right? So what are the global headlines? Obviously US trade and tariffs, right? Every second day we have the US president announcing tariffs, some days on India, some days on EU, some days on France. Just day before yesterday I was reading about 200% tariff on French champagne. So this is a very uncertain kind of a situation right now, right? US trade, US tariffs, right? Now there is also this debate on whether these tariffs are, constitutional, whether they are valid. They have been challenged in the US Supreme Court, right? But the court is yet to, the jury is out on it. The court is yet to give a verdict whether the tariffs are legal and binding or that can be scrapped, whatever. So there's still this uncertainty which remains as far as the tariffs are concerned, right? Risk of policy reversal again. So whether these policies can be, this trade can be, the tariffs can be reversed, cannot be reversed. What will be the implication if the policy, the tariffs are reversed? What will be the implication if they stay as it is right now? So that is one area of concern. Second is China's trade imbalance. Now, this I believe is again a very important point, somewhere hidden under the whole noise of tariffs. China has got a record trade surplus of roughly $1.2 trillion. Now, what is a trade surplus? A trade surplus is when I produce more and I consume less. I produce goods worth, let's say, 100 rupees, and I consume goods worth only 80 rupees. So that's a trade surplus. So what do I do with that? मैं उसका क्या कर सकता हूँ? I can export it. That is one way. I can increase my consumption. So from 80, I can increase it to 100 rupees, right? So that these are the options that I have. But as of now, as we see, China is holding a record 1.2 trillion trade surplus, and this is as of 25. Trade surplus, as I said, it is because of a weak domestic consumption, right? China has invested a lot into infrastructure. They've invested a lot into machineries, factories, and all. But the consumption is less, and that is why is the consumption less? Probably demand is less. The Chinese people are saving more rather than spending, and once people start to save, the demand goes down. Once the demand goes down, the trade surplus increases, right? So that imbalance, China's imbalance, again is leading to global volatility. And thirdly, we've seen conflict zones. We've seen Russia and Ukraine going at each other for the past, as far as I remember, it'll be close to 4 years now. In March, April of 2026, it started in 2022. So Russia, Ukraine, Middle East, Iran, Israel, and all of these. The Middle East, if we talk about specifically, is a very, it's the oil producing region, right? So oil price whenever countries go to war, and especially the Middle East, the crude could spike, right? The prices for crude oil could spike. So price sensitivity as far as oil is concerned, and as we see, roughly 50 odd percent of our imports is oil. So if the crude oil price 50-60 डॉलर से $65 होता है, या if it goes to 65-70, whatever, if there's a 10% increase in the crude oil price, that will impact us because our borrowings will increase, the cost of our borrowings will increase, right? So if I have to put it roughly into how we read it, is US uncertainty, the tariffs uncertainty, the China's trade imbalance, and certain conflict zones, right? So all of this is leading to the global volatility. Again, the FII flows, right? Transmission to India, flows, currency, and sentiment. So I'm sure everybody, we've seen, and we have always heard, at least I have heard this growing up, and for the past 20 years that I've been associated with the financial services industry and the financial markets. FIIs have been a major driving factor, right? FII investments into India. Every other day we see FII is buying, FII is selling. Not, we cannot make out much about what exactly does it mean. So I'll just try to clear this. FII is investing into India. FII is investing into emerging markets, and specifically India. That is a very positive, or that used to be a positive factor, right? It was, and it still is considered positive. FII money coming in is always positive, but the same is true for reverse also. So when the FII money flows out, right, that is where the markets try to, or are correct a little bit. So when FIIs pour in money, the markets rise. When FIIs take out money, the market corrects. Now the situation is completely different. Situation back maybe 10-15 years ago to current situation, it's completely different. Earlier, our reliance on FIIs, our dependency on FIIs was huge, right? So when FIIs take money out, the markets would correct sharply, right? And when the FIIs bring in money, the markets would rise accordingly. What has changed in the past, probably what 10 odd years, I can say, is, and post, specifically in the past 5 years, is we have moved away from depending onto FIS to some extent. I would not say completely, but to some extent, yes, we have moved away. If I have to just put it in numbers, FIIs have sold worth 5 lakh crores. If I talk about from September 2024 till December 2025, in these 13, 14, 15 months period, FIIs have sold worth 5 lakh crores. And earlier, if I had to talk about this, FII selling worth 5 lakh crores was huge. Okay. So the consequences could have been catastrophic. But what has happened is we've got the DIIs buying a lot of it. And the DIIs have bought roughly to the tune of 10 lakh crores. Right. So that is to an extent. I'm not saying it has completely negated the FII outflows. FII flows still remain a concern. But yes, to a large extent, that was we had a buffer. But having said that, FIIs still matter, and they will still matter, continue to matter, right? Maybe in a little lesser degree, but yes, FII outflows definitely matter. And when FIIs take their money out, we've seen the market correct, as I said earlier also. September 2024, from 26,200 till round about 23,000. And again, now we've seen continuous renewed FII selling. Money going out from emerging markets, money going back to the US dollar. The yields are rising in the US, right? So yields are rising in Japan. So all of this is leading to a lot of FII selling, and the FIIs taking the money out. Also, money going into other asset classes. I mean, if we have to talk about metals, gold, right? So all of this is leading to a lot of instability. Nifty slipped below 26,000 level, and today we are at roughly, when we talked about, when I prepared the data, it was 25,694. Today it is roughly 25,100 odd as far as today's closing. So yes, FII's currency, the Indian currency also, rupee weakening is again another reason. Today we are at what, roughly 91 rupees to the dollar. So that is again a challenge. So all of these is leading, a weaker rupee is leading to the FI outflows, rising yields is leading to the FI outflows, a lot of factors. And in such times, how investors should respond, right? Now, this is something, all of these will continue. We will have FIIs coming in again. We will have FIIs going out from time to time, right? We will have rupee depreciating. We will have rupee appreciating. We will have a lot of domestic flows coming in. Maybe some bit of profit booking. All of these factors. So, what should investors do, right? How investors should respond? One thing is avoid chasing narratives. Ignore market noise. If we look at how the market has grown, we've seen 2020, we've seen COVID, right? Nifty round about 7,500, 8,000 level at the peak of COVID, the last week of March 2020. Nifty crashed to round about 7,500, and from today, from that day, if we talk till today, we are up 3x from there, right? 3x, three times, right? So again, so the 17% CAGR. So there will be noise, and in between we also had the Russia Ukraine crisis when Nifty corrected again, right? So if we were to just chase the noise, right, chase the narratives, अच्छा बाजार गिर गया या कोविड आ गया, चलो चलो let us take the money out of the market, and Russia Ukraine crisis हो गया, crude oil spike हो गया, take the money out of the market. These things will keep on happening. The best thing is to stay invested, avoid chasing these narratives, right? Ignore the market noise and quick gain stories. Abhi aajkal, now this is a new trend, and I think this is important, and that is why I've put it onto my slide also. Quick gain stories. Rato rat ab isme paisa laga dijiye, you will make money. That it doesn't happen. It may have happened to someone some years ago. That doesn't mean it will happen to everybody. It will happen with everybody. There is no one size fits all, right? So ignore the market noise and ignore quick gain stories that often distract from disciplined investing. Discipline is something which is very important, what I believe. Discipline is something which is the most non-negotiable aspect of investing. You have to be very disciplined. You have to understand how much to invest, where to invest, which stocks, what is the valuation, etc. So discipline. Do not get into leverage kind of this thing. Do not get into poor quality stocks, right? So avoid chasing narratives. Focus on quality and cash flows. Now this is again one thing which is very important. One should always focus on quality, right? So when I say quality, quality in terms of the business, quality in terms of the management, quality in terms of the cash flows, whether the company is making money, whether the company has free cash flows or not, how is the cash coming in, right? Prioritize businesses with strong fundamentals. Again, fundamentally अगर business strong होगा तो आपका देर सवेर पैसा बनेगा बनेगा और बनेगा. Business अगर यदि strong हो तो, and that also should be reviewed from time to time, right? So prioritize businesses with strong fundamentals. Sustainable growth has to be sustainable. Growth is something and sustainable growth is something else, right? So growth, let's say today we have a 15% growth and the next day we have a 10% fall or 15% fall. As compared to that, you should opt for something which is sustainable. The growth is sustainable, though it is maybe 8%, but it is sustainable. So focus on businesses which have strong fundamentals, which have strong management, which have better policies, strong growth, and all of this at a sensible valuation, right? So I'll talk about the sensible valuation also. And stay selective. It's not that all companies, you have to invest into all companies. Just one data set which I want to share. Roughly 92% of the listed market cap is there in Nifty 500. 92% कंपनीज, जितनी भी बाजार में लिस्टेड कंपनीज है उन सबका मार्केट कैप हमने मिला लिया तो 92% तो निफ्टी 500 में आ जाएगा, राइट? सो बाय डिफॉल्ट आपका यूनिवर्स छोटा हो गया, राइट? एंड देन पिक एंड चूज, स्टे वेरी वेरी सिलेक्टिव विद दैट, remain in the market to benefit from the long term compounding, but exercise rigorous selection. Get into the market, time, stay invested in the market, and there's an old saying, time in the market is more important than timing the market. आप टाइमिंग करोगे, बाजार पीक पे है मैं बेच दूंगा, बाजार एकदम बॉटम पे है मैं ले लूंगा, वैल्यूएशन वाइज मुझे अच्छा लगता है at 22, 23, 24, 19, 20, whatever multiple, right? So all of these things one should be very very selective about. And once you've chosen, once you've invested, stay invested, assess the market, assess the situation, assess the fundamentals, whether they are appreciating, deteriorating, whatever. Stay invested, stay focused, and stay you know stay wise, be wise in your decision making, right? So other aspect is structure over stock tips, right? Your portfolio construction matters, how you construct your portfolio. Now this is just one small pyramid which I've tried to make or drawn to just make you understand is your major effort should go into how you allocate your assets, right? Asset allocation is something which you have to be very very sure about and uh, place more emphasis on. Second is the stock selection process. अगर आपका एसेट एलोकेशन हो गया, जैसे एग्जांपल वट एवर एसेट क्लासेस, उसके बाद में स्टॉक सिलेक्शन प्रोसेस है, लेट्स से अबाउट इक्विटीज, सो इक्विटीज के बाद में स्टॉक सिलेक्शन प्रोसेस, how do you select, what are the kind of stocks that you want, whether you want growing companies, whether you want defensive companies, whether you want undervalued companies, whether you want to get into penny stocks, whatever it is. So stock selection process is something which is very important. And उसके बाद least importance should be given to market noise. In fact, according to me, is there is no this thing. You cannot say you can completely ignore. Yes, there will be times when there will be a lot of noise, but you have to be very wise in how much time you should be giving, how much importance you should be giving to such market noise. So stock selection and structure is very important. Once you have done these 2-3 basic things right, I think more 90% of your job is done, right? Consistency in your process will beat prediction, right? Your portfolio construction, your process, opinions, all of this put together will create wealth over a longer period. Now we at Advisor Alpha, what we do is we have this philosophy of selecting stocks, right? So when we say what is our philosophy, as I discussed previously, we follow the philosophy called SQ GARP, right? What is SQ GARP? SQ GARP, S stands for sustainability. We want to invest into businesses which are sustainable, right? We want to invest into businesses which have quality, which have strong governance, superior ROE, etc., and pricing power. So S stands for sustainability, Q stands for quality, G stands for growth, right? So sustainable businesses, quality businesses, growth oriented businesses, but all of them at a reasonable price. ARP is at a reasonable price. And when I say reasonable price doesn't mean that a stock is trading at 5 rupees or 10 rupees or 15 rupees or 20, 25, 50, whatever. Reasonable price is what is the price that you are paying for the earnings. Now, let's say a company is growing at, let's say, 10%, and it is trading at a valuation of, let's say, or multiple of 80, तो उसका भाव हो गया 800 रुपया. बट 10% से ग्रो होने वाली कंपनी को क्या 80 का मल्टीपल मिलना चाहिए? Unfortunately, that is what people do not understand, or most investors. Even, I mean, that was the case with me also earlier. For a company growing at, let's say, 5-10%, we would be happy to pay a multiple of 20-30, depending upon the sector that the company operates in, right? So be very wise with how much do you pay. And we've seen multiple examples. We've seen multiple cases where IPOs were priced higher, and post listing they corrected and they remained below the IPO price for a very long period, right? Why did that happen? That happened, see, valuation is here, your growth is here. Either the valuation has to come down or your growth has to go up, right? For your price to, if the growth goes up, then your price will increase. If the valuation come down, your price will crash. So one needs to be mindful of these, that the businesses should be sustainable, they should be quality, they should be growth oriented, or rather at least we focus on growth oriented kind of businesses. But the most important point is the price. We would not want to pay an obnoxious price for our companies, right? As I give you the example of 10, let's say 10% growth, maybe 20, 30 multiple. So this is the philosophy that we follow. And based on this philosophy, we have a couple of model portfolios, right? We have single stock advisory that we give out to our clients, right? Very soon we'll be coming with the mutual fund advisory also. But the model portfolios, what are these model portfolios? Ultimately, it is about creating wealth. See, understand one thing: when you are investing into the market, what is the objective? The objective is to create wealth, right? I mean, there are people who come for the thrill of it, right? But the what I understand and what all of you would agree with is also this the whole objective of investing into equities, the risk that you take with equities is to create wealth. And once you are you want to create wealth, you need to understand all of these things. You need to have a right kind of portfolio, right? So we run these model portfolios. These portfolios are professionally curated baskets, right? So these portfolios, they are curated by experts, right? And they are tailored to your risk profile, whether you are conservative, whether you are balanced, whether you are aggressive, right? And it is like, I mean, if in my presentations what I do is, it is like, for people who want to invest, who want to create wealth, we are financial doctors, right? So we prescribe these portfolios. You have to just adhere to what we do. Whenever we say buy, you can buy. Whenever we say sell, get out of a certain stock, get into something else. So these kind of portfolios, you will always be benefiting from this. These portfolios are built for discipline and long-term wealth creation. It is not that all of a sudden ratorat you'll see your stocks, your portfolio doubling and tripling and all. That may happen, may not happen. Usually it doesn't happen in most cases. एक आधा केस में कोई एक स्टॉक में कभी हुआ तो होगा. But in these portfolios for disciplined investors, you understand we need to also recalibrate our risk, recalibrate our expectations of returns. If we are expecting a 50, 70, 100% return every year, that is not going to happen, right? That does not happen. So we need to recalibrate our expectation. If someone is expecting 100% return, at least to my best of my knowledge, that doesn't happen every year. It may happen once, that will not happen every year. So we need to understand what is it that we can get. Obviously it needs to beat inflation, it needs to beat other asset classes, returns from other asset classes, etc. But equities may, yes, you can expect around about 15, 18, 20% kind of, as I said earlier, nifty around about 15 odd percent. So equities may, that is the kind of return that you can expect, and which is way above your FD, as I had shown in the previous chart. So these are the model portfolios that we provide. Single stock advisory, yes, we have exclusive stock ideas backed by deep fundamental research with clear reasoning and actionable strategies you can trust on, right? So for someone who's investing, who wants to invest, who wants to start, right? And I am very sure about this thing, and people who've been in the market for quite some time, people who have just joined in. We've seen the explosive growth of participants in financial markets. Just to give you a data, in 2020, we had roughly 5 crore demat accounts. Today, we have roughly 21 crore demat accounts, right? So that has grown fivefold rather, over the past 5 years. So a lot of first time investors, new investors have come into the market, right? They may have participated. There are a lot who are still sitting on the sidelines who want to participate, but they do not know where to start. They do not have that much capital, who want to start small. Yes, you can start with single stock advisory, you can start with model portfolios, right? Single stock advisory as compared to a model portfolio will be a little lesser, so you can start with anything around about 5, 10, 15,000, whatever. Model portfolios you can start with around about 25, 50,000. So that will depend upon the kind of portfolios that we have. But yes, for someone who wants to participate into equities, these model portfolios, the single stock advisory is something which can definitely benefit, which can give you an idea as to which are the kind of companies that we should be looking at, and when to invest, when to enter, when to exit, etc. So invest with structure if you are investing into model portfolios. And if you are investing into single stock, if you want to invest, if you let's say one or two or three stocks, then we have some really, really high conviction ideas which you can benefit from. Right. So this is it from my side, which been roughly 40-45 minutes that I've been talking. I will take a pause over here and we'll open the floor for questions. And over to you, Ronak. If we have questions, we would definitely love to answer those.
Yes, Chirag, we have questions. So, just wanted to remind the audience that if you want to start your investing journey, you can scan the QR code given on the screen and download the app so that you can be connected to us and join our WhatsApp channel also. And we can then to get more market insights basically. So, Chirag, we've received about 3 to 5 questions. Uh,
Okay.
let's see how many we can answer in the given constraint of time because we are already 42 minutes in. So I don't want to make it too long to bore the customers and everyone.
Okay.
So first question is that what are the biggest mistakes investors make during volatility phase? So in the phase which we are in right now, what are the biggest mistakes everyone is making? Because if someone is new in this phase, they want to know ki how what should they avoid and what should they explore.
Good question. Times, right? So volatility is something, as I said initially, also very unsettling. We lose hope, right? क्या करें, बाजार तो रोज गिर रहा है. Today also Nifty was down 500 points. Yesterday it was 250 points Nifty. Yesterday also it was around about 150 200 points plus, right? So काफी volatile है. And what should one do in these volatile times is, first and foremost, stick to what you have chosen, right? Do not enter and exit at impulse. Today okay, आज लगता है चलो निफ्टी 100 पॉइंट्स ऊपर है, हम बेच देते हैं. आज 100 पॉइंट्स नीचे है, हम ले लेते हैं. So impulsive buying, impulsive action is something one should avoid. It requires a lot of discipline to just, and my one of my favorite saying is, the most difficult thing to do is to do nothing. To do nothing is the most difficult thing. And impulse, there's a lot of noise, and unfortunately because of this a lot of social media, ye wo sari cheezein, there's a lot of noise. People are saying, today when you scroll Instagram, you get market news, right? Ab ye kar dijiye, ye bech dijiye, ye le lijiye. Stay away from all of that. Do not do anything. If you have invested into a quality portfolio, stay invested. Impulse se dur rahe. Assess kare, and usko whether that decision is good or bad is something which can be assessed. But impulse se dur rahe. Do not get into impulsive buying and selling. Secondly, one has to be very sure about the kind of stocks he or she has, or the kind of portfolio that he or she has invested into. Have faith, equities will go through these testing times, right? Markets, there will be this 5-10% corrections considering the valuation. Or India जैसा emerging market है जहाँ पे there's a lot of FII flow coming in and going out also. So because of that, there will be volatility. But yes, stay invested, stay focused, stay disciplined. That is the short answer as to what one should be doing.
Second, so I'll go to the next question. How do you, sorry, How do global events like US trade policy or China slowing down transmitting risk into Indian market? So they want to know basically the global political tensions that are happening right now. What do you see? Are they a part of which the volatility because of this all the like Trump and everyone is making an issue out of policies? Is that the reason the Indian market is tanking right now, or it is, or there are some other reasons also that that are helping the Indian markets crash basically?
See, yes, the answer is yes. A lot of global political and geopolitical tension is causing the volatility, but we have to understand two, three things. See, we import more than we export. That is one thing, right? So, and yes, which are the countries that we export to? We export to the US, we export to the UK, we export to the EU, we export to the Latin American countries. तो ये सारा इंपोर्ट एक्सपोर्ट का जो ये है नाउ ट्रम्प हैज पुट अ टैरिफ ऑन इंडिया फॉर परचेजिंग रशियन ऑयल 25% टैरिफ उसके ऊपर लगा दिया राइट सो what happens in such scenario is and what we have done previously also we've done free trade agreements FTAs with a lot of countries just as we speak today probably on the 27th we'll have a announcement and as the Europeans put it the mother of all trade deals coming up on the 27th of January announced on the 27th of January right so there will be this agreement so today when we are exporting to US एंड वी आर फेसिंग टैरिफ्स इसका मतलब क्या होगा कि हमारे गुड्स महंगे हो गए तो वहां पे लोगों को लेना थोड़ा डिफिकल्ट हो जाएगा सो व्हाट वी आर डूइंग इज वी आर स्मार्टली डाइवर्सिफाइंग वी आर नॉट डिपेंडिंग ओनली ऑन द यूएस फॉर आवर एक्सपोर्ट्स राइट सो diversifying from the US doing free trade agreements with and there is a trade deal happening with the US also which should be announced or which will be progressing we doing good work on that तो ये सारी चीजें हैं और ये सारी चीजें चलती रहेगी secondly, the China part of it, right? As I covered in the previous slide, trade surplus hai. So we have to be aware of all these things and we have to be cautious and we have to position ourselves according to all these events as to what the China situation is, what the US situation is, Europe के साथ में trade deal होती है, कौन से sectors benefit होंगे, and accordingly, so assess, be be aware of what is happening, and then accordingly build positions. So that is how, and accordingly build portfolios. So that is how one should be positioning.
So, what is the view on your budget that is going to come up right now in Feb 1st? And what do you think about the benefits in that will happen to the Indian equity?
Sir, I'll tell you what, when we talk about budget, this is something which I have never understood because every time I expect something and something else comes out, right? So it will be premature on my part to say something as to what we are expecting. Yes, we are expecting. They see government has done a lot in the past roughly 1 year. They recognize the slowdown in the consumption sector. So the last budget gave roughly around about 12 lakh rupees tax free in the hands of the investor, right? So such kind of things will keep on happening from time to time, but what exactly will happen, because see we are in a public forum. If we say something, it should not be construed as a recommendation that oh you expected, you said this. So it is premature. It's just we are 1 week away from the budget. Let it happen, and then we will, rather than discussing what could happen, we would be happy to assess what happened and what is the way forward. So little premature on my part.
Okay, so let's go for the last question. So, so basically, last two questions, and we'll close the.
Okay.
You spoke about the FII, right? The rupee falling down, and so a lot of investors are really scared right now. In their reactions are like they're selling out, they're maintaining cash, they're moving, they're selling out of the portfolios, logging out basically. What would you suggest them to do right now?
See, as I said, stay away from impulsive buying and stay away from that goes for selling also. Stay away from impulsive decisions, right? आज market is at an all-time high, sell कर दो. Market is falling, sell कर दो. Market is falling without understanding कोई भी sector buy कर लो. It should not happen that way. See, as far as the investors selling and when market is very volatile, it Had you sold in 2020, would you have made the kind of money that we are sitting in 2025? No, that was also a very panic situation, right? March 2020, I'm talking about. I vividly remember June, July, May, June, July 2022. 18,800 Nifty came down to around 15,600, 16,000 odds. Again, uh, impulsive selling. If had we sold at that point of time, and it's been only what 2022, it's been 4 years now. In these 4 years, the kind of money that 18,800, from there it went to 15,600, and from there it went sitting at 25,000. Did we or could we have made this kind of money? The answer is a clear no. Yes, had we stayed invested, would we have made money? Yes, we definitely would have made money, right? So market will correct, will rise, again it will correct. Stay invested, stay with quality names, and please avoid impulsive decisions. And that is what we've seen recently. I was speaking to a couple of clients, and they were also of the view that, our instincts say that we should sell. See, market will be at an all-time high, but the same was the story when the 18,000 also, when the Nifty was 18,000, when the Nifty was 20,000, today when the Nifty is at 25,000. It's an all-time, 26,000 was an all-time high. But then the markets will break the all-time high and make a new all-time high, right? So stay invested, and please do not bother about the volatility. Let professionals like Advisor Alpha manage your money. It's as simple as that. It's like going to a doctor. You do not take a dolo by yourself. It might work once, it will not work always. So take the help of professional money managers. And if you are in the market to create serious wealth, it is always a professional money manager who will help you achieve your goals.
So the last question, and this has been repeated throughout our webinars: gold and
Okay.
silver.
Gold.
People are gold and silver.
Uh,
So people are very, very constrained about you. What do you think about the market with gold going up, silver going up, now platinum also coming in the picture and going up?
See, I would rather not comment on, see, because it is very speculative. See, silver was locked in a down circuit yesterday. It's risen up, way beyond what I had thought, right? What I understand about commodities. I mean, I'd stick to my forte, which is equities. Yes, I mean, there are times when so these are safe haven assets. So when the market is turbulent, you'll have movements in gold, and so when the market is turbulent, gold will
Hmm.
increase. When the market settles down, then probably gold would correct and the equities would increase. But putting a number to it, आज 1.5 लाख वाला या 1,55,000 वाला गोल्ड कहाँ जाएगा? 10 grams gold is 1,50,000, whatever. तो वो कहाँ जाएगा? I am not into the business of predicting that, because there are a lot of factors. See, it's not about predicting just for the sake of prediction. There are a lot of factors which go into why the prices move. So I would refrain from commenting on the prices of gold,
Okay,
silver, whatever.
so we'll go to the last one since we are not doing in that question. So like people like how is this platform? How is our platform Advisor Alpha is going to help investors right now? Because we are at a point right now that the market is so volatile that a lot of people like you must be getting a lot of calls daily, understanding ki, is there something that you can help us. So how our platform, which we are providing right now, do you think it's going to help them in during this volatility time, or how? What do you see? Like how can we help the customers right now from our end?
See, a very good question, and this is, I believe, the most important question is how can we add value, right? How can we help investors make money? What happens is we do not understand, and as I said, impulse hai, half baked, half knowledge hai, other knowledge is more dangerous, right? So Advisor Alpha as a platform is the portfolios, the model portfolios or the single stocks. These are professionally managed portfolios, as I said, right? So this will help you to understand what stock you are investing into, what portfolio you are investing into, why you are investing into this particular portfolio. Out of the entire listed space, what we pick up is round about, जो हमारी जो SQ गार्प philosophy है, applying the SQ Garb philosophy, we pick up certain two, three, when I say single stock. So out of the listed, what, 3,000, 5,000 companies, we've picked up one company which we feel is beneficial for the investor. And it makes the job that much more easier for the investor also, right? It makes the job easier in the sense he does not have to go through or analyze all of these companies. Experts have chosen one, two, maybe three companies, four companies, five companies. Trust some expert, if not advisor alpha, some other advisor, but trust a professional who can help you achieve your goal. So our role here, we feel, is very, very important. We carry a lot of, and people look up to advisor alpha, or people look up to us as experts, and we have to live up to those expectations. So we cannot be recommending any stock just for the sake of recommending, right? It has to be backed by fundamentals, and that is what we do beautifully, and we've been doing it for the past 5-7 years. So yes, to make to answer this in a very simple language is, we can help you cut through the noise. That is one. We can help you to analyze, assess the market, and assess the situation, and build a portfolio which will create wealth over the long term. So that is something which is that is the very basic thing that an investor, and that is the most important thing that an investor would require. Cut through the noise, give me good quality companies, assess the situation from time to time, analyze the companies, analyze the situation, and then act accordingly. If you have to get out, we'll tell you to get out of a company and get into something else. So all of these things will keep on happening from time to time, and this is regularly monitored. So yes, you are the you are in sync with what is happening globally and at India level also.
So I think that's enough. We have more questions, but we'll take it up some other time, and we'll send them an email. We have all of their registration details. So we'll send the
Okay.
rest on email to them. And so this is all. That's all for now. Thank you, Chirag, for that wonderful session on the volatility. Because I understand this is the most important factor right now, because the market today also was very volatile. And
Correct.
so I hope everyone enjoyed their time and learned about the volatility, how it's an opportunity for everyone to earn, not just to sell. So this is that's all for today. We'll stay tuned for our new webinar, which is going to come. We are going to be talking about on the first of February only at 4:35. We'll be talking about the budget. Basically, we are decoding the budget on that day only itself. So stay tuned. Thank you so much, everyone, for joining in, and that's all for today. Thank you so much. Bye bye.
Thank you, thank you, thank you, Ronak. Thank you,